Hello and welcome to Power Breakfast, an Investonomics and initiative of ICICI Direct. Joining us today on the show is Prashant Pitti, co-founder of EaseMyTrip. Prashant, thank you very much for joining us on the show. It's been a very strong quarter for EaseMyTrip with a six-fold jump in profit, a very sharp increase in revenue. I mean, this is phenomenal in a pandemic quarter, right? Break this down for us. Tell us what went behind such a strong quarter.
Well, firstly, thank you, Samina, for having us on the show. Really appreciate it. A little bit background about EaseMyTrip for your listeners, before we jump into the quarter. We have been in existence for last 13 years. We have been serving people, their travel needs, be it flight, bus, train, everything, right? Now, in the last 13 years, there has not been even one single quarter where we have seen loss in 13 years. And that is coming from a travel company where all our competitors primarily have been in losses every quarter. So we come out as a dark horse in the industry. We are competing against 6 internet travel companies where almost everybody has been in losses, where our company has never seen even one quarter of loss. And that too includes the COVID wave 1 and COVID wave 2 quarter. Now, the profits which you are seeing in COVID wave 2, of course, the profits have gone up when you compare year on year, because a year before, we were seeing COVID wave 1. So in COVID wave 1, we managed to make about 2.5 crores, which itself was great. To be honest, we were also surprised. Okay. Given that for almost 2 months, there was a country level lockdown. So only in one particular month, which was the June of 2020, where passengers flew, we were able to manage to cover all the cost for the first 2 months. This is how we scaled up our operation in June 2020. Now, for this particular quarter, of course, as I said, that the numbers have increased because in COVID wave 1, there was a complete lockdown, but this time it was more voluntarily. There was no lockdown and as such in this particular COVID wave 2, which was quarter 1 of FY22. Right. So our revenues did increase when you compare a year back, but our revenues went down if you compare quarter on quarter, which is quarter 4 of FY21. Our PAT was somewhere around 31 crores, while our PAT for quarter 1 of FY22 was around 15 crores. So profitability did diminish because of the COVID wave 2. We did business of about 900 crores in quarter 4, while in quarter 1, we did business of 360 crores. So that was the impact of COVID wave 2. It was devastating to say the least, wasn't it? Now, however, how did we remain profitable while everybody was in losses? Well, that's basically the DNA of the company. This company, the fixed expenditures of our company, fixed expenditures are basically your employee cost and your admin cost, right? The discounts, the marketing, the payment gateway, they all are variable. Now, the fixed expenditures for our company is only 2.3% of our GMV. So if we are able to sell tickets worth 100 rupees, we spend 2.3 rupees on our employee and our admin cost. When you compare this to the industry leader, to our competitor, their fixed expenditures are somewhere around 9.6%. So if they sell tickets worth 100 rupees, they spend 9.6 rupees on employees and admin costs. That is the starking difference between both the companies. Because of our fixed expenditures being extremely low, and how did we manage to get there? Well, of course, the automation is the answer. In the last 13 years, we have automated almost everything we could. The humans which are working in this company, they are actually helping the technology. While in our competitors, mostly, technology is helping human. This is the difference in the outlook between both the companies. And for us, this is the only way we could have grown, because this company never ever raised any funding from any investors or bank. So for us, this was the only means to grow. There was no other means, just to keep automating as much as possible. The front end which consumers see is, you could say that it looks like the same as what everybody has. Yeah. But the key difference comes in the mid office. How our users use our technology to serve people better. Right. This is the key difference. So, being extremely high in automation, and being able to generate much better commissions from airlines, hotels, bus operators, tour operators by negotiating with them is how we thrived even in such tough conditions.
That's amazing to hear, Prashant. Talk to me about cost optimization because very obviously, from what you alluded to, your profitability has grown significantly because of working more efficiently. Can you tell me a little bit more about how that's going to be once business comes back to normal? You've sold fewer tickets, but you've sold it at better margins, right? So there are, of course, also that's on the one side. On the other side, you've been giving out discounts. I'm assuming there are freebies. But when things go back to pre-COVID, would this sort of cost optimization be sustainable, you think?
See, this is the beautiful part about it. Why do we value companies like Zomato for a 1 lakh crore, right? Even though they are loss making, the values are justified. To be honest, I'm not saying anything negative about them. The reason is the internet companies, be it like us, be it like Zomato, be it like anybody. Our cost need not increase as our revenues increase. We keep hitting the operational efficiency year on year, and because of the economies of scale, since we do not have any physical presence, there is no need for us to increase our employee as proportionately as our revenues. So we believe that the gains which we have made during the pandemic time in optimizing our cost are in for a long run, and in fact they are only going to get better as we speak. So this is the advantage we get by being an internet startup.
Right. Prashant, talking about Zomato, Amazon, you name any internet company, the first couple of decades were largely about spending cash to acquire market share. You talk about economies of scale as well. You are rare because you are actually profitable being an internet company. Would it be fair for me to assume that the next leg of growth or of course objective for the company would be to increase market share, which would probably come in at the price of giving up profits?
Not really. If I could share you some key statistics, you would be surprised too. We are profitable, but not at the cost of not growing. We are the fastest growing travel company in India right now. We grew at 47% from FY18 till FY20, 47% year on year. So the growth is not a problem for our company. We are growing at the fastest pace, and that we're doing it profitably.
Over there, when you're coming from a lower base, growing is much easier, right? So those numbers, of course, will rationalize the bigger you get.
I don't know if you could say it is a lower base anymore. We are the second largest OTA now in India. I'll give you some statistics which probably will help you understand at what scale are we at now. Okay. We are primarily an air ticketing company, all right? 95% of my business is air ticketing, 5% is all others put together. We are catching up on the other part, but let me just talk about the air ticketing, all right? In FY19, the industry leader was 5.6 times bigger than me in selling air segments, okay, in FY19. In FY20, they were 4.2 times bigger. In FY21, they were 2.7 times bigger. And in recently concluded quarter, they were 2.3 times bigger.
Okay.
So, the industry leader is 2.3 times bigger than me in selling air tickets now for this particular quarter. And see, if you could see that how fast we are catching up on them from being, 5.6 to 4.2, 2.7 to 2.3 every quarter.
Prashant, I want to talk about your vertical breakup, right? Give me a sense of what is the growth outlook for the air booking space and also the non-air booking space, which would be trails, insurance, hospitality. What is the kind of growth and contribution from these segments we're expecting going ahead?
Thank you. Well, Samina, for the air part, for FY20, the entire Indian air industry was worth 90,000 crores. While it is poised to grow at 15% per annum because of the Udan scheme, because of new airports which are coming in. And by FY25, it is expected to grow till 1.7 lakh crores. Now, that 1.7 lakh crore market is up for the grab for EaseMyTrip. As I've already shared that we are catching up on the number one player, we are looking forward to become the dominant player in the air side by FY25.
Wow.
And the entire market of 1.7 lakh crore turnover is a possibility for EaseMyTrip. The reason is very simple. We have been able to keep our cost extremely low and offer customers value by not charging them convenience fees, which everybody else charges. Yeah. EaseMyTrip EaseMyTrip is primarily growing on the plan that our prices are cheaper compared to others since we do not charge convenience fees and we are growing via word of mouth. That's for the air side. For the non-air part, which is hotel, bus, train, insurance, and others, you'd be surprised to know that the numbers which we hit in this particular quarter. For quarter one of FY22, we did total 1.95 lakh transactions, which are non-air related. Now, for the entire year of FY21, the transactions were 2.55 lakh. So we almost achieved 80% of entire last year, and that too in the period which was COVID wave 2 ridden. This is at the pace at which we are growing our non-air segments. And the growth is coming the growth is coming very simple and very fairly by cross-selling mechanism. Whoever is buying flight from us, we are recommending them to try our hotel, bus, train feature as well. So all the features which are available on any of the website are available on EaseMyTrip. And it's just that people know us for the flights and now they're getting to know us for the other features as well.
Prashant, you obviously have very ambitious plans. Talk to me about what is growth going to look like going ahead? Are any sort of acquisitions on the horizon? Any sort of forward, backward integration that you're looking at? Any conversations that are underway? How are you looking to grow so aggressively going ahead?
Well, to give you a context, prior to IPO, since we never had any investor in the company, we didn't know what the value of EaseMyTrip was at that time. But now, post the IPO, our shares are valued 5,000 crores, which is part of the market. Now we are aggressively looking forward to utilize this new currency and grow further in non-air segment. See, air we are already sorted. I shared you the numbers at what pace we are catching them, and that too profitably. So we are not looking for air specific or air related acquisition, but for the non-air, which is bus, train, hotel, cabs, we are going in very aggressively. And since last 5 to 6 months, I must have spoken to around 90 odd companies in travel space, and of which we have shortlisted a few of them. And within this financial year, we are looking to acquire 5 to 6 companies, to say the least.
Right. What is the average deal size, Prashant, of these companies that you're looking to acquire?
They vary from all over the place, but we are actually looking for companies who are disrupting the market right now. The ones who are actually creating the ripple by their unique business model and are almost profitable. So the companies which are almost, and those are the kind of companies which we are looking for, and the companies which are already profitable, they do not need any cash infusion. So in most of the cases, the deal will be that EaseMyTrip will basically take their shares, and those companies will become subsidiary of EaseMyTrip, and fresh new shares will be issued to the promoter. Fresh new shares of EaseMyTrip will be issued to the promoter in lieu of it. So most of them could be a cashless deal, to say the least.
Right. And in a case where there would be some requirement of cash for acquisition, would it be done through internal accruals, or would you look to?
So yeah, the company has extremely healthy books. We have around 250 odd crores sitting in the bank right now, either in the format of FD or in the format of cash reserves. So if there is a need to pump in money in the company in the newer subsidiaries which are coming in on the basis of acquisition, we are ready for it.
Right. Also, you talked about other internet companies, and most of them have gotten to the size they have with a lot of outside PE, VC money by diluting stake. Any plans, Prashant, of you and your brothers who may potentially look at diluting stake to become the number one player, right? So any sort of PE, VC that you're in conversation with?
Well, to be honest, we have avoided that route for the last 13 years, and we probably would continue to do so. 75% of this company is still holded by us. 25% is up in the market right now. Right. So, we think that there is still so much on the table, and our equity is extremely cheap right now. So we would not want to sell it at this particular time.
And what if there's a player who's looking to acquire you? How would you deal with that? Would that be any sort of merger, any sort of synergies on the cards amongst the industry leaders?
Well, to be honest, we know that, we are going for the kill. So there is no point for us to, sell ourselves out cheaply at this particular time. So no.
It's great that you're so confident. Also, very lastly, going ahead, of course, you talked about how you are an outlier in the industry. Apart from cost optimization, tech, anything else that you're doing, any sort of synergies that you work with your vendors that is helping you keep this pace? And would it be fair for us to assume that this sort of pace will continue going ahead? I mean, a growth of 30-40% is doable?
Well, we are doing whatever is best in our capabilities to continue the growth momentum. To give you an idea, we recently launched a feature which I think is by far the biggest thing which we have done in the last couple of years. The feature basically is book any domestic air tickets on EaseMyTrip. Book any domestic tickets on air ticket, EaseMyTrip. If you have to cancel it because of any medical reasons, just upload doctor's prescription and get full refund, even the money deducted by the airlines. Airlines deduct 3,000 to 4,000 rupees per passenger, right? So you can get all that back by uploading a doctor's prescription if basically you had any medical emergency. This is the feature which is coming right from our pocket. And we thought that this could be a great feature for this particular time where people are hesitant to make a booking just because they're not sure what's going to happen 1 month later when they are about to travel. Will they be quarantined? Will they have some problems related to health? Because of which we launched this feature. And this feature is absolutely free to customers. There's no additional charge to avail these features on EaseMyTrip.
Right. I guess it is about disruption, and that's what the industry is all about. Thank you, Prashant. It was great chatting with you today, and good luck. It looks very promising for EaseMyTrip. I hope all your aspirations do come true. Thank you.
Thank you so much, Samina, for having us on the show. Pleasure is all mine.
Likewise.